Today we'll be doing question number 25 based on retirement. This is the second option of the chapter retirement of a partner. This question you can consider it as a comprehensive question as it has in it all the important points relating to this chapter. Starting with these are normal capital given of three partners. PSR is 5 is to 3 is to 2. Year end is 31st March 25. Things which we need to go through a question. Then you're given workman compensation reserve. So for this, we have to see if any claim is there. Otherwise, full amount is distributed to all three who are there in the balance sheet. That's the case of retirement. Then you're given accumulated depreciation on building. Rather than showing building 1 lakh less depreciation 20,000, they have shown it here. So what is the worth of building here? It should be 80,000 on asset side. Okay. Next, accumulated then P&L. This is your gain. This will go to partners capital account on credit side. To whom? Old partners, old ratio. So next is creditors liability, outstanding expense liability. Then you have bank, building, furniture, debtors, stock, prepaid expense. Prepaid expenses are asset. Deferred revenue expenditure. This is opposite of, you can say, P&L. This goes to debit side of capital account into old partners in old ratio. Okay, so we should not forget this. Similarly, this is existing goodwill. Existing goodwill is also supposed to be written off by old partners in old ratio. We are not supposed to forget this. So next comes that Burman retired. This person retired. And his share is acquired by these two equally. So they take it equally. So his share is taken equally. So gaining ratio turns out to be 1 is to 1 in this case, as the wording tells us. So you don't have to calculate it if it's required for goodwill treatment. Then let's move down to the adjustments. Look at all the adjustments one by one. Starting with the first one, create a provision of 10% for debtors. Let me recreate a reval account here for you. So first thing is provision for debtors 10%. Debtors 50,000. 10% of that 5,000. That is your provision for debtors. Next, market value of building is 1 lakh. See, if you would have ignored this accumulated depreciation, you could have thought there is no change. But building is actually worth 80, becoming 1 lakh. So it's good for us. So over here, building comes as 20,000. Next, furniture is overvalued by 20%. You are given furniture at 60,000. This is overvalued by 20%. I mean, whatever should be the value here, this is 20% more than that. Let's relate it to what we used to do last year. 1 by x on cost is 1 by x plus 1 on sales. So let this be sales, selling price. So here we have 20% more. So 20% more than cost. So 20% is 1 by 5. So this is 1/6 of 60,000, which is more. What is 1/6 of 60,000? 1/6 of 60,000 is 10,000. So we need to stock is overvalued. So we need to reduce stock by another 10,000 rupees. Not stock, sorry, furniture. Furniture is reduced by 10,000 rupees. You can cross check it like this. If I make furniture as 50,000, what is 20% of 50,000? When once you want to cross check, 10,000. So 50 plus 10, 60,000 comes. That's what is given to us. This 60,000 is overvalued by 20%, 20% of original cost. So furniture depreciates. Then stock is valued at 55,000. So stock is increasing by 15,000 rupees. Next, creditors of 15,000. Out of 25, creditors of 15 told us we will take over stock in 10 or stock of 10,000 in settlement of their claim. They will say we'll consider it as a 15,000 thing. So in a way, we need to pay certain amount less for our creditors. What is that? 5,000. So creditors liability reduces by 5,000. Goodwill of the firm is valued at 80,000. Existing one will write it off, and this goodwill of the firm is valued at 80,000 means uh, we'll find out this person's share, that is 3 by 10. 80,000 into 3 by 10, which is 24,000, and they'll take over this in the gaining ratio. So Raman debit to Burman, 24,000 is taken over. You have to write full names due to space. I'm doing this. Divide it in the ratio of 1 is to 1, 12,000 each. Prepaid expenses are worth less, means this asset is worth less. Reduction in asset is bad for us. So prepaid expense 20,000 comes here. Next, outstanding expenses are now 20,000. 15 becomes 20. Liability increases by how much? 5,000 rupees. Next, let's move on to the next part of this question. Uh, there are no other adjustments relating to reval. Let's try and find the profit loss. 15 and 20, 35 and 5, 40,000 is the total here. And the other side is also 40,000. So we have no profit, no loss in this. Now let's come to the capital account. We have opening balance of partners. Full workman compensation is transferred to all three partners in the ratio of 5 is to 3 is to 2. So P&L is also transferred. Now what is this 1212? Goodwill. Burman is getting credited and the other two are getting debited. This is the goodwill posting. Then comes next part, deferred revenue, existing goodwill, and now you are told, let's see the last adjustment which is given. This is the best way to do these questions is draw a format of reval and capital parallelly. As and when you see the adjustments, keep posting them. Like in this, if you will see the marking, all these postings have half mark each. So even if you could not solve full question, you could not do the adjustment part, you could not complete the goodwill part, but posting these things will also get you some marks. You don't know the treatment of all adjustment, at least three adjustments you knew, you will get marks for that. So please do what you know. Don't leave the question thinking it will go wrong, it will not tally. So let's see the last adjustment. Burman was paid 20,000 immediately on retirement. Simply put cash and 20,000. Now let's see what else are they saying. They are saying this was brought in by Aman and Raman. Aman and Raman are old partners. In which ratio? 3 is to 2. So when we divide it in the ratio of 3 is to 2, it comes 12 and 8. So cash to Aman, when someone brings capital, it comes on their credit side. We are paying to the partner, it is coming on debit side. We have not fully paid him. We still have a balance. So that balance goes to his loan account. And the other two partners will have a balance CD because there is no capital adjustment given in the question. We will simply find the balance CD for these two people. This is how we will solve this question. This question is testing you for all accumulated profit, losses, Then it is testing you for different adjustments, a unique reval related adjustment. So this is a very good question. Same adjustments could be a part of admission question also. Must solve this question on your own twice to gain confidence in these adjustments. Similarly, there were many new adjustments in your admission question also. So both the questions are very good, very well covered. New things are also tested. Must practice it twice. Thank you.